Hi, this is Patrick Ambrose from fractalvibrations.com. I wanted to go over my trading style, how I use fractals to play markets in different positions. Uh, One of my favorite charts at the moment is Caterpillar. This is a Caterpillar chart from 1994 all the way to the current you see projecting into the future, and that's in green. The black is Euro USD. The Euro USD price action comes from November 2012 up until the high in February 1st, 2013. The pattern is a pattern I've seen play out on different charts, different time frames. For whatever reason, it just seems to repeat itself. Uh, what the pattern suggests is that eventually Caterpillar will resolve itself higher and take out the 110 previous high, and it should do that by mid 2014, if not a bit sooner. One thing I like about this pattern in particular, from a technical perspective, is if we do indeed break below this swing high in Caterpillar or this swing low, then you know that likely this pattern is invalid and that this thing might be a bit more bearish than I'm suggesting here. However, I think the pattern is a really good one, really tight one. And more specifically, if we look at a shorter time frame, this is Caterpillar daily since March 2012, overlaid against another fractal, sterling yen, from April 11 to December 2012, right before the announcement of qualitative and quantitative easing from the Bank of Japan. This is another fractal I've seen play out on different charts, different time frames. In particular, one of the reasons I like it is this three wave come down and then this just sloping, upward sloping consolidation, hinting potentially at some kind of accumulation by larger institutional players in this market. And then all we would really need is a fundamental catalyst to light the fire. Um, Obviously, there is risk that this market could come down, retest these lows. But again, as long as it stays above this 70 level, then I think that this trade and this setup is or this chart, this fractal, and this setup is valid. And how would I play that? When I trade, I like to get trades of at least 5-to-1 reward to risk, and but I prefer trades with 10 or 20-to-1. And oftentimes it's difficult to do that through the spot market. And one of the ways I like doing that is through the option market. So more specifically to the point, here's the TOS options platform. Here's Caterpillar typed in. I think that Caterpillar, based off of the second chart that we just looked at, in about 45 months' time should be at the 110 high. 4 to 5 months' time will put us between March and April of 2014. However, sometimes it's nice to have a little extra time, and also there are no contracts written on March or April. So I'm going to look at the May calls. There are a lot of potentially interesting strikes. However, I'm going to go with the 110s because I think that they're the cheapest, they have the least time premium built in, and that this market right now perceives them as some of the least likely to be in the money of the options that are being written at the moment. So for simplistic sake, we're going to look at one contract to assess the risk to reward, and you can see that if we trade below the current price, which I think 83.74, and we expire worthless by May 17th, 2014, the max risk on one contract is $11. If we do indeed, the fractal does indeed manifest and play out, the reward per contract would be, this not exact, but would be about $545 if it hits 110. That's approximately, rounding up, 50-to-1 risk reward to risk ratio. So that's a way that you can skew asymmetry in your favor, and you can really define and limit your risk. And you don't have to worry about the trade. You can put the trade on, and you can sleep at night. You can forget about it, and if it hits, it hits. That's my style. Often I don't like to take profits before my options get in the money. There are times when I do. Circumstances change, fundamentals change, global macro changes, and you can't really help that. You have to kind of be in a reactionary mode. However, for the most part, I do like purchasing out of the money options, calls or puts, in whichever direction I think that the market is going and volatility is going to be skewed towards. And wait till it gets in the money, and then once it's in the money, usually I will take profit. And in certain instances, like in this trade, the upside is potentially unlimited. And again, your downside is really limited, really tight. So this is how I am trading Caterpillar. I'm not making a trade call recommendation, solicitation in any regard. I'm not saying that you should get in this trade or even think about getting in this trade based off of this video. I'm just trying to educate you as to my approach, how I look at markets, how I see things, and how one way to trade fractals. I think fractals can be a very powerful tool because they can tell you sometimes turning points in market, and they have asymmetric predictive power as far as risk to reward is concerned. So that's one of the reasons I like this setup in particular. Hope you enjoyed the video, and if you have any more questions, check out fractalvibrations.com. Shoot me an email, and hope you have a great weekend.